This is Matthew Kratter from Trade University, and today I want to ask the question, who will bail out the bailouters? Yesterday I made a video, no bank bailouts ever, and just a few hours later we received word that Silicon Valley Bank, SVB, will be receiving a bank bailout from the Feds and from the Federal Reserve. I'll link to this joint statement by the Treasury, Fed, and FDIC in the description notes below, but I want to go through some of the key parts of it, and you're really not going to believe your eyes. Here is the key quote, one of the key quotes from the beginning. Today we are taking decisive actions to protect the U.S. economy by strengthening public confidence in our banking system. Now, allow me to translate that. What they're actually saying is that the U.S. economy and banking system are both so incredibly fragile that commercial bank number 18 shutting down could bring down the whole system. Banks fail all the time in every country, including the U.S. They fail almost every year. But when a venture capitalist and startup founder bank fails, immediate action needs to be taken, I should have said. In other words, venture capitalists and entrepreneurs themselves don't even believe in real capitalism anymore. And as we've been saying, this is the mantra of the so-called elites. Privatize the profits, socialize the losses. When venture capitalists and entrepreneurs have a good year, they do not pay into the bailout fund, but when they have a bad year, everyone else has to pay. Here's another quote from the same announcement. Any losses to the Deposit Insurance Fund to support uninsured depositors, this is the FDIC fund, will be recovered by a special assessment on banks as required by law. Translation, we are going to penalize banks that had good risk management by charging them extra fees to bail out banks like SVB that had terrible risk management. Makes perfect sense, but I would ask, what effect will this have on future risk management at banks? Basically, you give bankers the same thing that we've given hedge fund managers, like long-term capital, for example. Heads I win, tails I still win because I get a bailout. If you're enjoying this video so far and you'd like to help support this channel's mission, I would just ask you to hit the subscribe and like buttons. They were very keen to point out in this announcement that, quote, no losses associated with the resolution of Silicon Valley Bank will be borne by the taxpayer. This is amazing because they actually taught me in school that there's no such thing as a free lunch in economics, but I guess now in 2023 there finally actually is, thanks to the Fed's magic money printer. Here's the Bank Term Funding Program. Basically what the Fed is going to do, what each of the different Federal Reserve banks is going to do, each of the branches, is they are going to purchase, make available, being able to purchase this collateral from the banks that has fallen in value. For example, mortgage-backed securities and treasuries, it's fallen in value because the Fed itself raised interest rates so sharply, but they're willing to redeem this for cash at par value. So if your bond has fallen to 70 or 80, you can still go to the Fed and get made whole as a result of this. Now, where does the Fed get the money to buy these bonds at par? They just print it, of course. And this is, of course, what all of us do when our family budget runs a bit short for the month. We just print up some extra money that we can use. Actually, if you and I do it, it's called counterfeiting and we go to jail. But if bankers do it, it's called monetary policy. And it's a really smart thing to do, especially if you're bailing out your buddies in Silicon Valley. By bailing out Silicon Valley Bank, the Fed is impoverishing everyone else a little bit more through inflation and monetary debasement. So feel free to explain to me why VCs get their bailout. And I should say, as I disclosed in yesterday's video, I'm an investor in a VC fund that will be receiving a bailout as a result of this. And it's completely unethical, it's completely unfair, but I'm still happy to get it. But explain to me why wealthy investors like myself and venture capitalists and their funds get a bailout while the working and middle classes get higher gas and grocery prices in exchange. Here's the really scary thing, though. If you zoom out and look at the big picture, congratulations, your bank account is now fully protected by the U.S. government. Of course, this is the same institution that has $31 trillion in debt that it can never pay off except by rolling the debt, and $182 trillion, I should have added here, in off-balance sheet debt. Now, to put those numbers in perspective, U.S. GDP, in other words, the complete productive capacity of the U.S. economy in terms of goods and services, is only $26 trillion. So it's much less than the Treasury debt we have, and it's much less than the off-balance sheet debt that we have, which is basically all the entitlement programs that need to be paid out. And so you have basically an inverted pyramid where you have GDP at 26 trillion, and this is the economy that's supposed to service this enormous mountain of debt. Down here we have the productive capability of the economy, and then we have all this debt piled on top of it. And this is a very unstable situation. And so this is why I asked the question, who's going to bail out the bailouters? I'll link to this if you want to look up where I'm getting these numbers from. Here's US GDP, here is US national debt. And if you scroll down here, you can see US unfunded liabilities at 182 trillion, which is such a large number, it's hard to even imagine it. So who's going to bail out the bailouters? Who's going to bail out the US Gov? Nobody. The US dollar will just be allowed to massively depreciate over time, not rapidly, but over time until it is worthless like all other fiat currencies. This is where they all end up. So the US dollar really is this escape valve for this slow-moving crisis. I love Max Keiser's tweet here. Bitcoin is an easy 10x from here. The Fed and Treasury just capitulated like a Walgreens manager, letting all the looters walk away with everything in the store. Except this time the looters have different looking faces. They look like David Sachs, they look like Chamath, and they look like Bill Ackman, the hedge fund manager. If you take a look and you see what's happened in the last week, it's actually quite extraordinary. Silicon Valley Bank being shut down, and this was a bank that obviously serviced a lot of crypto startups. Signature Bank was shut down yesterday as part of this whole thing. And of course, Silvergate is shutting down as well. We also didn't cover the news that Caitlin Long's bank in Wyoming has been having a lot of trouble getting permission from the Fed to get access to FedWire and all of the things that the Fed can offer them. So what we're seeing here, it almost looks like the US government is trying to shut down every single bank that services the Bitcoin and the crypto industry. You should know, if you don't know already, Bitcoin and crypto are extremely different. Bitcoin is a digital commodity. Crypto is just a bunch of unregistered securities, but they're technically grouped together in many ways in this industry, unfortunately. As Michael Saylor likes to say, we Bitcoiners are in a dysfunctional, abusive relationship with all the crypto scammers. But even seeing this happen, you have to ask yourself, would you try to open a Bitcoin or crypto-friendly bank after having seen this? This is the message from Washington, D.C. Touch Bitcoin or crypto, and we will shut you down, especially if you are a bank. What does this mean for Bitcoin? Well, I think it's too late to shut down the big Bitcoin bank in the sky, fortunately for all of us. By contrast, it's very easy to attack these software companies that have issued unregistered securities like Ethereum and Cardano, USDC, etc. It's impossible to stop Bitcoin. Most of all the Bitcoin that will ever be created is already out there in the world and can be used for hodling or buying goods and services. No permission required from Jerome Powell or Janet Yellen or the FDIC or anyone. And if your country is not nice to Bitcoiners, they will just pack up and leave to another country, another jurisdiction that is more friendly. If this trend continues, it might just start getting a little bit harder to buy Bitcoin on an exchange. It's been very easy to do that up until this point and withdraw to self-custody. So you have to ask yourself, do you have enough Bitcoin? Are you going to wait until they shut the official doors completely? And if you think banning Bitcoin or making it very difficult to get your hands on it, even if it's not an outright ban, is going to depress the price, you have to pay attention to what happened to the price of marijuana and physical gold, both of which were made illegal in the early 1930s in the US. What happened to the black market prices of gold and marijuana after they were banned by the US government? Did they go up or down in the 1930s? They went up a lot. So keep this in mind. And when you're considering your Bitcoin accumulation strategy, I know it's a recession, it's hard times, it's hard to come up with extra cash, but I think all of us has extra things that we don't need. I've been cleaning out my garage and selling things and trying to raise more capital to buy Bitcoin. I got rid of a car that I didn't need, just getting rid of stuff and moving it into Bitcoin. I think it's wise. That's not investment advice, but if this trend continues, I think it could be much more difficult in the future to get your hands on some Bitcoin. If you found this video helpful, so be sure to hit that subscribe and like button. Hit the notification bell if you want to be notified when I publish my next video. And let me know your questions and comments in the comment section below. Thanks all for watching, and I'll see you in the next video.